Hello everyone and welcome to another edition of the Money Garden. Today it's Money Monday and happy Monday everybody. Thank God it's Monday. I know some of you are laughing out there like what is wrong with her? Monday is not good. Well, you know what they say, if you love what you do, you never work a day in your life. I actually love Mondays. I love every day equally. So let's get to it. Today I want to talk to you guys a little bit about automating your finances and why is it so extremely important. Well, first of all, it's very important because we always seem to have problems with discipline, don't we? We're not very disciplined, especially when it comes to money and finances. When we have a little extra in that account, we start feeling so comfortable with it, and we just kind of start spending it. And guess what? Before you know it, right, it's gone. And I'm sure that a lot of you are nodding, yeah, this happens to me. Why? I know that because I know that for a long time it happened to me. So this is how we put a little bit of a check on our discipline with respect to finances. And I just want to put this out there. This is not my opinion, you guys, necessarily, or just coming advice from myself. This is experts. I learned it myself. And experts, as the biggest minds in the finance industry, will tell you the same thing. And they actually do it as well. So let me break it down. Right now, we're just going to stay very high level. And what happens is on the front end, it's going to take a little extra effort. Not that much. It's not that big of a deal. You just have to open a couple of extra savings accounts or checking accounts for yourself. Also, make sure which ones are the no fees and the easiest to open and no fees. But on the back end, I promise you, you will be happy you did this. So let's get to it, right? So let's assume you have a business first. Because if you don't have a business, if you work for a W-2, then all of it is just going to be personal. And then I'll get to that in a second. But let's assume you have a business or your own business. Then the high level, you're going to need 3 accounts, you guys, 3 accounts. So the number one is going to be your main business account. And this is where your money is going to go in from your clients, from your customers. This is your business account, or your revenue, where the money goes in. So from here, immediately, you're going to have a separate account that's going to be called your tax account, and you're going to have 33%. So if every week in here goes $1,000, you make $1,000 a week or whatever, $1,000 in a month or whatever your revenue is, 100,000 in a month, whatever your revenue is, 33%, $300 out of 1,000, it's going to go into your tax account immediately. Because when you have a business, the government is not taking taxes out of your paycheck as you go along, right? You have all the money that you make, all your revenue, but you have to pay taxes at the end, and it's a big check that you have to cut to the government. And it's not fun. It's very painful if you don't have the money set aside. So your tax account, 33% of your revenue goes into your tax account. And then 34% of your revenue goes into your personal revenue account, right? So 3 major accounts if you have a business. It's going to be your main business account. And then 33% you're going to keep in your business account, which is you're going to invest it back in the business, and that's going to be your operating revenue, right? So 33% business account, 33% for your taxes, and 34% for your personal living or personal revenue, if you will. Now, with your personal, if you don't have a business, you have a W-2, then everything else is pretty much personal. Your taxes are already taken out of your W-2, so you don't really need to worry about that too much. If anything, at the end of the year, you get money back, which is always nice, right? That's why we actually get our taxes done on time, because we want that money back, right? But here are some of the important different accounts or categories that you want to definitely plan for. And so it's going to be 4 major accounts. Now we can always drill deeper if you have a lot of debt, or if you don't, or you have, let's say, child support, or you have some other things that you have to pay for different situations. Different structure might work better. This is, again, very high level overall overview that it would apply for majority of people. And 4 accounts I want you to remember. So it's going to be, again, your personal revenue, or your main account is going to be where your check goes in, right, from your job, right? Or some jobs will do it for you. The HR department will do it, that automatically they'll send your money in 3 different ways, right? You can do that too. But here are the different ways that you want to set it up. One, it's 4 accounts, and one is going to be something called your living expenses. This is where you're going to pay your bills out of, your rent, your bills, your car payments, etc. And then you're going to have some everyday spending, right? Number 2, it's going to be your emergency fund. Emergency fund should be about 3 to 6 months of expenses. Some financial literature will tell you 3 to 6 months of income. Fine, I don't care. You could do income or expenses. I personally like to go with expenses because if you lose your income or you lose your job, well, expenses is what you still need to pay for. And I just always like to make sure that my clients are properly covered just in case. So in emergency fund, 3 to 6 months of your expenses. So for example, if your monthly expenses are $2,000, your emergency fund should be minimum $6,000, maximum about, well, there's no really maximum. To some extent there is maximum, but that's a whole other conversation because we don't want you keeping all your money in a bank. It's not going to grow. But anywhere from $6,000 to $12,000, 3 to 6 months of your expenses. Emergency fund. Number 3, retirement account. So you may have a 401k at work, and if you do, that's great. But if you don't, or in some cases you might want to put extra aside, you should never put more aside for retirement other than what your company matches you. Now, what you should be doing is having another IRA or a Roth IRA or some type of other or cash value life insurance. It's another excellent way because it's tax-free. You really can save and grow your money, invest it, get the high rate of return tax-free. But again, that's a whole other conversation. I'm not going to go into it. But you should have the number 3, a retirement account where you put a little bit of money. Guys, even if you $20, it doesn't matter. Right now, I don't want to go into it how much should go into every one of them, but I do want to go into it, just focus on making sure, set up that account. If it's $5 a paycheck, set it up because it's the habits. It's the habits that we develop slowly that is going to get us to our goals. And then number 4, the last one is experts highly recommend this. Now, a lot of people, maybe they don't have much left, but maybe later as you start saving, paying off that debt, having extra savings, this is definitely something you want to think about, to have an extra account where you can put a little money aside for other investments, right? Any expert will tell you that the best way to invest and grow your wealth is diversification, right? Not one wealthy person is not diversified. And if you're out there and you're putting all your money in one basket, please think about, rethink it. That is not the right way to build wealth. You have to diversify, you guys. You have to diversify, and you can go online, you can research this, you have to take my word for it. I know this is true, that over time, anybody that diversified over 30 years, they actually ended up making more money than the person who put all their money into one account or one basket, so to speak. So, and then some people like to invest in real estate. It's okay. Or maybe you want to invest a little extra money in a stock market, right? That's okay too. So whatever you want to dabble, when you have a little extra money, you want to try figuring out some different, maybe a small business or whatever it is. But it's very, very important that maybe the 4th account that you start putting a little extra money away for some additional investments or diversification. So very quickly, I'm going to review. It's so important. Set up these accounts. It's going to help you long run. And if you want more information on it, of course, reach out to me. I'd be happy, to talk to you about it or help you in any way I can, no charge at all. But if you had a business, you need 3 accounts: your tax, your business account, and then your personal revenue. 34%, 33, 33. And then from your personal revenue, or if you don't have a business at all, then you definitely want to cover, these are the 4 major ones you want to cover. Living expenses, where you're going to pay your bills and you're going to have a little extra money in your pocket. Your emergency fund, 3 to 6 months of expenses. A retirement account. And then the 4th one, another investment account for like real estate, stock market, whatever else you might want to do. So that should cover it. I hope that helps you guys. Please consider this. This is going to help you stay disciplined and reach your financial goals. So have a happy Monday. As always, I'm always curious to know your comments, your thoughts. Please let me know what you think, your suggestions, and I will see you guys on Wednesday.